Hello and welcome to the latest part of Business and Profession. In this part, I'm going to be talking about the disallowances. Before you go ahead, I would recommend that you go through part 1, which talks about the expenses. If you've already seen part 1, then you may go ahead and watch this part. The various disallowances that I'll be covering in this video are Section 37 2B, Section 40 Clause A, Section 40 Clause B, Section 40A and Section 43B. If you notice, there is a P or a T below the sections. P refers to permanent disallowance. That means expenses which will be disallowed and which will never be allowed in the future. T refers to temporary disallowances. These are expenses which will be disallowed now, but which may be allowed in a future year on the basis of the payment. Remember one important concept, that there can be no disallowance without an allowance. To understand allowances in detail, do check out part 1 of the series relating to expenses. Section 37 2B disallows advertisement in any publication of a political party. But remember that you may still claim the expenditure under Section 80 GGB or GGC from your gross total income. However, cash payments would not be allowed under those sections. Have a look at this question and try to answer it. No, it is not disallowed under Section 37 2B, but however, 37(1) itself does not allow this expenditure as it is a non-business expenditure. The next section is Section 40. Section 40 has two parts. The first part relates to a temporary disallowance. These amounts will be disallowed if taxes are not deducted or taxes are deducted but it is not remitted within the return filing due dates. There are three return filing due dates: 31st July, 30th September and 30th November. If the payment is made to a resident and tax is not deducted, or the tax is deducted but not remitted within the return filing due dates which you see on your screen, 30% of the expense will be disallowed. In relation to a non-resident payment, if the same is not done, 100% of the expenditure will be disallowed. Remember that this is a temporary disallowance and you will still be able to get the expenditure as an allowance in the year of payment of the taxes. The other disallowances are as follows: income tax, wealth tax, tax on non-monetary perquisites, royalty by a state government undertaking to the state government, or payments if equalization levy has not been paid. The next section is Section 40 Clause B. This is in relation to partnership firms. There are two amounts which may get disallowed. The first one is salary. In case of a salary, it should be authorized by the partnership deed. It should be paid only to a working partner, and there is a monetary limit. For the first 3 lakh of the book profit, or in case of a loss, the limit is 90% of the book profit or 1,50,000, whichever is higher. For the balance of the book profit, it is 60% of the book profit. So what is book profit? Book profit means taxable income after interest but before salary. The second disallowance under this clause is in relation to interest. Interest will be allowed only if authorized by the partnership deed and only up to 12% per annum. The next disallowance is Section 40A. Do not get confused with section 40 clause A. The first one is 40A subsection 2 for excessive and unreasonable expenses. The next one is 40A subsection 3. If payments are made exceeding 10,000 on the same day to the same person, otherwise than by way of account pay check, account pay draft, or a bank transfer. Instead of 10,000, the limit will be substituted by 35,000 for goods transport. The next subsection is section 40A subsection 7. This is in relation to provision for gratuity. Provision for gratuity will be allowed only if it is made towards an approved gratuity fund or the gratuity has become payable during the previous year. 40A subsection 9 disallows any contribution to unapproved funds. Test your knowledge by answering this question. The answer is no. 40A3 disallows only revenue expenditure, but as per a recent amendment, you would also not get depreciation as it would not be added to the block of assets. Do watch my video on depreciation to understand this in detail. Another question for you. The answer to this is no. The provision for gratuity is allowed only if it is made towards an approved gratuity fund or the gratuity has become payable during the year. In no other scenario will provision for gratuity be allowed. The last section we'll be discussing is section 43B. Onto the left part of your screen, what is disallowed? Tax, duty, cess. For example, GST or customs which is not paid. The second one is interest on loan to banks and financial institutions. The third one is contribution to provident fund, gratuity fund or other funds for the welfare of employees. The fourth one is payment to Indian Railways for the use of railway assets. The fifth one is bonus, commission or leave salary to employees. Remember, section 43B is a temporary disallowance and disallows expenses if they are not paid within the return of income due dates, which are 31st July, 30th September and 30th November. However, you will still get the expenditure in the year in which you pay the same. Thanks a lot for watching this video. I hope this video helped. The link to download the chart which I have used is there in the description to the video. Do download for a quick revision before your exams.